A death spiral that could end civilization as we know it. Those harsh words were used by former World Bank economist Richard Duncan to describe the path the U.S. economy could take if major changes don't happen, and fast. Here's what he said on CNBC over the weekend.
If they don't prevent the credit supply from contracting, then we will have a new depression. So the policy is to ensure that credit continues to expand. And now that's what government debt is doing. The increase in government debt is making total debt grow. Otherwise, we would have already collapsed into a debt deflation death spiral.
And Duncan is not alone in his fears. Experts, including former Reagan administration economists Lawrence Kotlikoff and Dr. Kurt Moores, agree. And yet, little is being done to reverse this trend, let alone acknowledge it. Here to help me get to the root of the problem and offer possible solutions, Peter Schiff, the CEO of Euro-Pacific Capital Incorporated. Hey there, Peter. Thanks for joining me. Now, as I mentioned, Richard Duncan calls this federal debt a death spiral. Is this accurate or is it an exaggeration?
Well, I don't think he's exaggerating. You know, for years I think I was more bearish than Richard Duncan. Maybe he's trying to out-bearish me at this point. But, you know, we are definitely headed for a real economic crisis in the United States. What happened in 2008 was just the opening act. I mean, the main event is still coming, and the debt is every much a part of it. You know, how it's going to be unwound. Is it going to be a currency crisis where the dollar collapses because we print all this money because we don't want to default and we can't pay, or will it be some kind of combination of inflation and default? But either way, the chickens are going to come home. The U.S. is going to be held accountable for trillions of dollars that we've borrowed and spent, and we are simply unable to pay it back. And we've created an economy, a phony economy, that is completely dependent on the ability to keep borrowing more money that we can't pay back.
Now, you did say that part of the problem is our debt. Is it really the debt or the persistent unemployment that's the root of our economic woes at this point?
Well, one of the reasons that we have so much debt is because we have a lot of unemployed people. And of course, we have a lot of people who are employed in non-productive ways. That's also part of the problem. That's why we have such a large trade deficit. But a lot of this is the fault of the central government, the Federal Reserve, that are micromanaging our economy from Washington. And the whole thing is screwed up. They are focusing our resources where they shouldn't be, whether it's housing, education, healthcare, banking, retail, and those resources are being diverted from where they need to be. So we have this phony economy that can't create productive jobs, that is dependent on the Fed printing, on borrowing, on trade deficits. But we can't do this forever, and the longer we do it, the bigger disaster when it ends.
But Peter, of the last 46 of the last 50 years, excuse me, our country has been in this kind of budget deficit, and we haven't gotten caught in a death spiral. So why now? What is really getting at this problem?
Well, not yet, but it's the enormity of the problem. It starts off as a small problem. It's like, you know, you can get cancer, but you don't die right away. You have to wait until the disease grows to the point that it kills you. And you know, our debt was a cancer, but it's taken a long time for the disease to progress. And I guess it's not fatal at this very second, but we're really close to it. If you look at the size of the debt, you know, the government is forecasting that interest payments on the national debt in 2013 are going to be $228 billion. The last time we had an interest rate bill that low, Ronald Reagan was the president, and the national debt was $2 trillion something. So what's keeping it going is the Fed. If we had to pay a real rate of interest on our debt right now, there is no way we can afford it.
I've also heard of the economy being described as a pyramid scheme that could potentially escalate to a point where we can't recover. But let's take a look at what's going on in Cyprus right now. This little island nation's banks were 8 times the size of the country's entire economy, and they imploded. The country was forced to turn to the European Central Bank to beg for money at whatever cost the EU demanded. And that was a $10 billion deal that was actually just reached pretty recently. And it cost the citizens quite a bit. And this tiny nation is making a huge impact on the global economy, particularly the U.S. So let me play you a quick clip. This is how the media portrayed this event.
May not think the story coming out of Cyprus can impact you, but you want to think again.
How can a small island nation off the coast of Greece, how can tiny Cyprus with just over 1 million people be rocking the economic world?
Protesters gathered outside the European Union office in Cyprus, demanding help from its neighbors.
This is a tiny, tiny country.
It's tiny but huge, potentially global ramifications that reverberates throughout the economy.
So it's a massive problem, and yet no one even knows where Cyprus is in the U.S. Take a look at this.
Yeah.
Do you know where Cyprus is?
No, ma'am.
No?
The country? Middle East?
Nope. No, not whatsoever.
It's by Jerusalem. I mean, Israel.
That's not very difficult for somebody who came from Europe.
I do not.
I do. Between Brazil, wait.
It sounds like it's in South America. Cyprus is a very large Mediterranean island just off the west coast of Turkey.
So a lot of people don't know where it is, and yet it's having a huge impact. And as I mentioned, they're seizing some 30% of the people's assets, the bank assets that are over $100,000. Can something like that happen here, where the government seizes our savings accounts?
Well, first of all, it's not fair to ask Americans geography questions. I mean, a lot of Americans can't even find the United States on a map, let alone Cyprus. But, a lot of Americans didn't know where Greece was either. And, it sounds a lot like what we said about the subprime mortgages. It's a tiny little problem. Why should we care? The problem is huge. Just because it's happening first, Cyprus is the tip of a very big iceberg when it comes to banks. Because we have deposit insurance in America, just like Cyprus. And one thing we have in common is if our major banks failed, if the two largest banks in America were to fail, Bank of America and Citigroup, there's over $2 trillion in deposits there. And the FDIC has about $25 billion. That's it. And of course, it's all in U.S. Treasuries. So if large banks were to fail in America, depositors are going to take losses too. And of course, what everybody forgets is American depositors are already suffering a deposit tax. It's called quantitative easing. 0% interest rates is a way the government confiscates the interest that you would ordinarily earn on your bank account. And because quantitative easing means that there's inflation, it means prices go up. We are paying a very severe deposit tax every year in the United States. And unfortunately, I think it's going to get much larger as the years go on.
All interesting points, Peter Schiff. That's why we turn to you for analysis. CEO of Euro Pacific Capital, Peter Schiff.